Imagine the same Wall Street giants that once dismissed crypto now not only accepting it, but actually leading its adoption and innovation. The financial titans who once scoffed at digital assets are now at the forefront, shaping the future of money. Just a few years ago, JPMorgan Chase's CEO famously called crypto a fraud, warning investors to stay away. The skepticism was loud and clear, echoing across the industry. Today, in a dramatic reversal, the bank is reportedly shifting a major part of its innovation budget toward XRP and blockchain technology, signaling a new era for both the company and the industry. This isn't a minor change, it's a seismic shift that could redefine global finance as we know it, impacting everything from cross-border payments to how banks interact with customers. The line between traditional finance and decentralized technology is blurring fast, as old institutions and new tech startups find common ground and shared goals. JP Morgan's move signals that the question is no longer if banks will adopt crypto, but how and when. The conversation has shifted from skepticism to strategy. This is about building new financial infrastructure, not just chasing investment returns. It's about laying the groundwork for a digital economy that could be more inclusive and efficient. We're talking about a major reallocation of resources at one of the world's most influential banks, a move that could inspire others to follow suit. Such a decision reflects deep conviction in the technology's potential and a willingness to embrace change even when it challenges old ways of thinking. It's a calculated bet on a new kind of financial plumbing, faster, more efficient, and more secure than anything we've seen before, with the potential to transform the backbone of banking. To understand this, we need to look beyond price charts and hype, and focus on the underlying technology and its real-world applications. This is an evolution in how money and value will move globally in the coming decades, potentially making transactions faster, cheaper, and more transparent for everyone. A legacy institution embracing what it once scorned shows the relentless pace of innovation, and how quickly the financial landscape can change when new ideas take hold. We'll break down what this means, why it's happening now, and what it could signal for the future of money. Let's dive in and explore the next chapter of financial evolution together. For years, Wall Street viewed crypto with suspicion, treating it as an outsider in the world of finance. The established financial system, built on decades of tradition and regulation, saw digital currencies as unpredictable and disruptive. Many in the industry saw it as a threat to their centralized control, fearing it could undermine their authority and establish business models. Bitcoin emerged after the 2008 crisis, proposing a world without intermediaries, trust in code, not institutions. It was a radical idea, challenging the very foundation of how money and trust had always worked. Bank CEOs and investors called crypto a bubble, a tool for crime, or a passing fad. Headlines warned of scams and instability, fueling public doubt. The core principles of crypto, decentralization and transparency, clashed with the opaque, centralized world of banks. This fundamental difference created tension and debate across the industry. Now, banks blocked crypto transactions and closed related accounts, citing risk and volatility. Customers found themselves caught between two worlds, often frustrated by the lack of access. Publicly, they warned of danger. Privately, their innovation labs studied blockchain's potential. Behind closed doors, curiosity grew about what this technology could offer. They saw how distributed ledgers could solve slow payments and costly settlements, offering efficiency that traditional systems struggled to match. The public skepticism was partly a way to manage perception and regulation, as banks navigated a rapidly changing landscape and tried to maintain their influence. Quietly, banks explored how to harness blockchain for themselves, investing in research and pilot projects to stay ahead of the curve. This behind-the-scenes research set the stage for today's dramatic U-turns as attitudes shifted and new partnerships formed. Now, institutions like JP Morgan are openly embracing the technology they once dismissed, investing heavily in blockchain and digital assets. The battle lines are shifting, and the future of finance is being rewritten as these two worlds begin to merge and redefine what's possible. Why would JP Morgan focus on XRP? Because XRP isn't just another crypto. Bitcoin aims to replace money. XRP aims to make banks work better. It's designed as a bridge for fast, cheap international payments. Today, sending money overseas is slow and expensive, routed through many banks. XRP acts as a neutral intermediary, Convert dollars to XRP, send instantly, convert to euros in seconds. Think of XRP as a universal adapter for money, connecting any currency to any other. This eliminates the need for banks to hold large amounts of foreign currency worldwide. XRP's value comes from its use as a settlement tool, not as a store of value. The more banks use the XRP ledger, the more demand for XRP as a bridge asset. For major banks, it's about efficiency, not speculation. XRP is next-gen financial infrastructure. JPMorgan's reported pivot to XRP is a landmark move. The bank has built its own blockchain tools like JPM Coin, but those operate in closed networks. Turning to XRP suggests they see value in a public decentralized ledger for global connections. Even small efficiency gains can mean billions for a bank of JPMorgan's size. The current payment system is slow and outdated. XRP offers instant 24/7 settlement. This isn't hype, it's a strategic business decision to optimize operations. Using XRP could free up capital locked in foreign accounts, making it available for lending. Redirecting innovation funds signals JPMorgan may see more value in leveraging existing networks than building alone. It's a pragmatic move. Use the best tool, even if it comes from outside. This could transform how banks operate worldwide. One of the biggest impacts of this shift could be in the world of collateral, which is a cornerstone of modern finance. Today, banks and large financial institutions rely on U.S. Treasuries as collateral for short-term loans in the massive repo market, which helps keep the global financial system running smoothly. But imagine a future where digital assets like XRP or other blockchain-based tokens could replace Treasuries as the preferred form of collateral. Digital assets settle instantly. There's no waiting for paperwork, no delays from slow wire transfers, and no need for physical certificates to change hands. This not only reduces counterparty risk, but also speeds up the entire process, making transactions safer and more efficient for everyone involved. Picture the repo market as a high-stakes pawnshop. Banks temporarily swap treasuries for cash, then buy them back, often overnight, to manage liquidity. With digital tokens, smart contracts could automate and secure these transactions in seconds, reducing human error and increasing trust. The result? Finance that's not just faster, but also more transparent, auditable, and far less prone to costly mistakes. Shifting from treasuries to digital assets would fundamentally rewire global finance, connecting markets in real time and opening new possibilities for innovation. Treasuries are the backbone of today's system. Digital assets could become the new, pristine collateral, trusted and accepted worldwide. This isn't about XRP or any digital asset replacing treasuries in value, but in function, serving as the foundation for secure, liquid transactions. It's about providing a new, efficient rail for liquidity and security. The implications for the future of finance are enormous, and we're only beginning to see what's possible. The irony is striking. Banks that once warned against crypto are now integrating it at their core. This isn't hypocrisy, it's recognition of blockchain's power to solve real problems. The narrative has shifted from conflict to convergence. We're seeing a bridge between old finance and new technology. The goal isn't to replace banks, but to create a hybrid system, combining stability with speed and transparency. This could make finance more inclusive and resilient. JPMorgan's move could spark a domino effect across the industry. We're at the start of a major upgrade cycle for global finance. True disruption often comes from the inside adopting outsider tools. The absorption of crypto tech into mainstream finance could impact billions. JPMorgan's pivot to XRP isn't just about crypto prices, it's about upgrading the world's financial infrastructure. A more efficient system means lower costs, faster payments, and broader access for all. But approach this news with critical thinking. Crypto is still evolving. Our goal is to provide clear professional analysis so you can make sense of these changes. The future of finance is being written now, as institutions rethink their strategies. Will digital assets replace treasuries? It's too soon to say, but the conversation itself is revolutionary. Institutional shifts like this are as important as any market trend. We're here to break down the complexity and keep you informed. The Wall Street U-turn is more than a headline. It's a sign of a rapidly arriving future. Stay tuned as we continue to follow this story and bring you the insights you need.